What up, everyone? Welcome back to Financial Education and Business. Today is going to be a little bit of education and business. I'm just going to be kicking it back, talking about one of the companies that are publicly traded, specifically in the health industry. I've been looking into this company for a while. I've made a couple of videos on it already, and I think it's a great industry right now where there is a gap, and they're doing a great job in kind of filling the gap and taking advantage of this. The cool part about this company name is HIMS&HERS. They provide customizable pills and medications, weight loss, hair, skincare, anxiety pills, and as well as they're getting into this GLP-1s, weight loss injections. I have bought the stock. I hold the stock. I started buying at $17 to $19. Right now it's sitting at about $31 a share, and getting up there in price, but still for the industry this company is in, for the product they're providing, they are still young, early, very, very volatile company. So to get into it, HIMS&HERS it provides customizable medication for people. Unlike traditional medication that you can get, a Publix, Walmart, Target, where you would go in there and just get whatever medication is just sitting on the shelves, the dosage and everything else is not very specific to a given person, but created so the general population can use it. HIMS, what they do is they actually you're able to get on this website and get a very custom pill created for you. For example, you don't want to, let's say you didn't want a pill and you want some kind of jelly, some kind of gummy that you prefer your pill in, or maybe some kind of powder. They're able to customize it in that way so that now you are able to take the pill right in a way that is most comfortable for you, but also customize the dosage specifically for you, and you're not just taking general over-the-counter medication. And this is a very big industry, right now. What we don't know is this industry is only available for the very, very wealthy, and a lot of the general population does not have this. But HIMS is bringing this to the general population. I think overall, for people that need some of these medication, is gonna make people healthy, because people are not just taking a whole bunch of medications that are just, the dosage is too much for them, but they can customize it to be that they can take it in a more customizable way for them, and they can treat themselves exactly as they need. So this is one of the reasons that I like HIMS, is that customizable medication they're providing to their customers. Obviously they have services. I mean, they have GLP-1s, the weight loss, sexual health. These are pills and gummies. They got hair, so if you're losing some hair and you want your hair to grow, whether facial hair or some hair on your head, you're able to get on here and customize some of the products they have. And the cool part is and they also have a skincare. The cool part about when you get some of these products and the product gets shipped to your house, the packaging is actually kind of neat, because it's not very recognizable, very inconspicuous packaging. It just gets dropped off. It looks like a normal package, and people are not going to look at it and say, oh, he's using HIMS products. And next, we're gonna just scroll down. The cool part about the way HIMS works is this is more of like a subscription based business. You don't have to always let's say you don't have the money, you can't pay for everything, especially some of these like weight loss drugs or medications or injections. It can be very, very pricey, and there are a lot of companies out there that offer it, but they offer it at steep price and you have to pay the full thing. But with HIMS, what they do is you can pay month by month, so it's a subscription base. So if you can't afford the full thing right now, that's okay. You can pay for it with time, and you pay for it over time, and you can actually afford the medication that you need. These are their popular treatments: the GLP-1s, hair loss, generic Lexpro. They got HIMS anti-aging creams, so facial creams. So this is their HIMS, and then they have their HERS as well, and they sell both. Obviously, they sell things for both men and women. So gain confidence with weight loss treatments. So as you can see, get access to medication personalization to your unique needs. See if and you can just click here and see if GLP-1s are something that you would take. I did not know this, but it seems like from the way they're showing this, there might be the injection and the pill. Now, a lot of people don't like the idea of actually taking some kind of injection, and they prefer to have a pill form, and it looks like they might actually weight loss. Yeah, they might have the pill form of this GLP-1, and if this company is providing these weight loss products at a very cheap price, there's gonna be so many customers that are gonna want to be a part of this and actually use this product. Thicker full hair starts here. I mean, obviously their main customers I can see being mostly females, and the benefit, and right now just I can see them benefiting both ends. One reason I'll say is, yes, females already do a lot of the shopping. Men sometimes find it very embarrassing to go into the hair section and get hair products, the sexual health section, and get sexual health products. But if you can easily log online and go just get it online, get it shipped to your house, that customer base is gonna be growing, and they're gonna be able to capture both male and female end of the customer life cycle, I guess, or customers. As you can see, weight loss, hair, mental health, sexual, skin, and supplements that you could take, nourishing your body. So it looks like this is just taking the jelly, she's using the facial cream, and I don't know what they're doing. Mental health, here's the GLP-1 compound semaglutides, brand name. So they're actually, the cool part here is Ozempic, Wegovy. So the cool part is, I believe HIMS is making their own GLP-1 products, and that's cool. They have the pill form as well, and the cool part about that is that's going to be in-house. They can produce as much as they want, and right now what's going on is there is a high demand, therefore there is a lot of people want it, and there isn't enough in the industry. So the price for some of these weight loss drugs is actually through the roof, and if HIMS can actually produce and create their own weight loss products, they can control that demand, and they don't have to be at the risk of working with Ozempic or other companies that produce some of these, and the price doesn't have to be fluctuating all the time, and there might be enough supply one day, and you have a customer who wants to buy the product, but demand is through the roof and there isn't enough. So this will let them control their products with that their customers want, without depending on external supply chain. So the cool part is, I guess, when you go on here, you kind of go on there, you apply for the drug you need, and then you end up like submitting what you want, talk to a doctor, and then weeks later they do review with you, or days later they do a review with you, and then next thing you know, you got your medication or whatever you're looking for sent it to your house. So better mental health, and they got obviously mental health drugs. Just to look at the company from a finance perspective, right? So the overview, I've had the stock for a while now, looking at right around here $17-18. as you can see, the stock is very, very volatile, just up and down, and this is specifically due to like news that comes out. For example, Amazon recently kind of entered this industry, and the stock just took a plunge here, $19.39, $32, and obviously when it did something like this, I bought I bought more shares, and since then we've seen the stock just take off insane. In the past year, the stock has gone up year to date 263%, in 5 years 225, 1 year specifically 264, in the past month 58, 5 days has gone up about 5% about, and today it went up about another 4.5%. So as you can see, the stock is definitely volatile over the course of just year to date. There's a lot of news, very reactive to whatever kind of news is out for the day. Size of the company, $7 billion company, still pretty small. Recently got added to the S&P 500, 400 small cap, I believe, and this company is definitely from a growth wise, there's still a lot of room to grow. It's not the biggest company and starting to get some name recognition, like getting added to the S&P small caps. Financially, to see let's just look at quarter over quarter. So 2020 starting in, let's look at year over year. So from 2020 and on, right, you can see this company is making pretty good revenue, 148 million, 271 million, and 800, over $1 billion, right? So this company is growing revenue at over 80s, 80, 90, 64, 67% year over year, and this is a lot of growth, and this means there are customers coming in, customers are buying the products, and Hims and Hers is able to make a lot of money because of this. And as I know, they spend a lot of money advertising, marketing, and I'm sure you've seen one of the products somewhere, marketing on YouTube, and different locations. So it's really good to see the company growing very fast. I mean, just like last year, they did about 65% year over year growth. Just this company overall continues to grow and dominate in the industry, and it's one of the only companies that is really doing this, and just really being a very dominant force in the industry. So they're making pretty good revenue year over year growth. Gross profits, I mean, they're making 271, and they're coming out with a gross profit of 204, 526 million, coming out with 400 million. And so as you can see, they are continuously able to keep a lot of their revenue. A lot of the cost is not going into this cost of goods sold. They don't have physical stores, so that is a great benefit for them in the long term, because you don't have to service all these different locations. The cool part about Hims is, one, yes, it is a very web-based. There's no physical stores, but they also work with large companies. For example, Target, Walmart, Walgreens. They buy the products, put it on the shelf, and imagine as this is a two-tiered company. Is one customer facing, that's the bread and butter, that's how they make their money. Two, they're able to send and ship some of these products to outlets and stores where their products can be put on a shelf. So they have two ways of growing the company overall in the long term. So to continue on, they're making good gross profit. We're seeing that, as you can see, their biggest expense here is general administration costs, over 100 million 200 million, 400, 600, about 700, about 900 million dollars here, selling general administration. And this is mainly like a lot of this is coming from their marketing expense, and they're spending a lot of money trying to get themselves in front of people, so people can start questioning like, what the heck is this all about, and kind of go down that rabbit trail and eventually subscribe and start using the product. Research and development, obviously this is probably going to grow more and more. They need to research, develop different types of products for customers. So the overall operating expense is high. As the company gets bigger and bigger, their operating expense is going to get bigger. I've had red flags a couple times here for this general admin expense, and my issue here was the company continues to pay too much, spend too much money on marketing. Yes, it's good, right? When a company invests a lot of money in marketing and to grow the business, but however, you want to get to that point of, okay, we've paid a ton of money to grow in marketing, but at what point do you become a company that's just of hype due to marketing versus people are naturally figuring out who Hims and Hers is and actually are natural customers that are going to stay. And so this is always an interesting thing for me. And also, is marketing an expense? Is it an investment in the company? And should it even be in this selling general admin? Because you're marketing, you're investing in the company, you're getting your word out there. In a way, I see that as an investment, but when it comes to marketing, they just need to, I think, spend a little less money. They are spending a little too much, in my opinion. So operating expense, this is really good to see. Where do we start? We started with negative $74 million in 2019, and they have, as you can see, they have gotten this loss number lower and lower. In obviously 2021, they lost quite a bit of money here, and then as they started coming out of that 2021 pandemic kind of year, things have gotten better, and for the first time this year in 2024, this company could hit positive profits, which means operating income. So this company is selling products, paying the cost of those products, paying the operating and marketing of all those products, and actually come out maybe an operating expense, operating income. And this is amazing to see. One note here is this company came out at a very good time, right? 2019, I mean, they have been around since 2017, but they kind of got into this 17, 18, 19, 20, the pandemic happened, and they, I'm sure, kind of benefited from that. Everybody staying at home, they need medication, they're going to start shopping online. And what you would go to a company that's specifically targeted for online internet using audiences like this. So but yeah, let's keep going here. Interest income, I mean, other earning before taxes excluding unusual items. So here we are, pre-tax income, so income after tax. Okay, there it is, net income to common shareholders. Now look at this, is such a good number to look at. I mean, this company is paying out operations expense, the cost of the product, and everything else, and over time, as you can see, they have improved their net income, the money available to common shareholders. I mean, they don't pay dividend, they're small, but when a company is finally hitting profitability, it shows that the company is able to operate and make money and start investing in other ways to grow. Maybe start using that money in different ways because they have money at the end of the day, and they're able to invest because they have money, invest into the next year and continue to grow the company. And this is a very good compounding for the company, and this is where you see a strength coming in, right? When you see companies that are making net income at the end of the day, a whole bunch of investors are gonna see this as a strong sign to purchase the stock and start taking the company more seriously. EPS, once again, EPS is doing much better, 0.47 EPS here, and negative 0.111 in 2023. So overall, company is doing pretty good here. Gross margins, phenomenal gross margins here. I mean, this was 50%, but overall 70 to 80% gross margins over the past couple of years. So from net income perspective, balance sheet, income statement, phenomenal. Balance sheet, I'm just going to take a high level here, and I'm going to look at their current assets and compare them to their current liabilities and see if the company is overweight, if they have too much liability, if they have enough assets to cover their debt, right? So this is their total. It's already bolded. So this is their total current assets. And a lot of this current asset is booked right here, cash and short-term investments, which is very, very, very liquid assets, right? So their total current assets, as you can see, has grown significantly over the past couple of years. And to compare that against their current liability, and as you can see, $20 million in 2019 in liability, the assets about 70, and then $15 million in current liabilities, assets, liabilities, assets, over $269 million in assets, $79 million in current liability. So from an assets to liabilities perspective, this company is doing phenomenal. Total assets, total liabilities, and once again, the same image showing a strong balance sheet. The company is not overly in debt. They have enough assets to be able to cover any crazy event that might happen, and if anything, they have a strong enough balance sheet to be able to go out there to raise money on this strong balance sheet and actually be able to get a good rate on a lot of these different types of money they're able to borrow from banks or investors out there. So net cash, as you can see, their net cash position has just grown. 21-16 here, went down a little bit. I believe this is 2022 and 23. Yeah, 21 and 22. These are the years that they're coming out of COVID and everything else, so this went down. But since then, net cash position continues to grow. Cash, company is this is the net income, getting to the positives. This company is positive operating cash flow here. It was negative, as you can see. They're getting into the positive operating cash flow. They are investing cash flow, coming to the positive end. Maybe they can invest a little bit more. They have financing cash flows. As you can see, whatever kind of maybe they're buying machinery, purchasing stock, they're buying their own repurchase of their own stock, which is treasury stock. And this is amazing. When a company is buying their own 170 million shares of their own stock, it's definitely a positive sign, is because they believe in their own company. And if they didn't think that the stock was good enough to buy, they wouldn't be buying it back. To look at this page, there was something very specific I wanted to just kind of go over. Income, I guess this is just in the last 12 months, revenue of 1.24 billion, gross profit of $1 billion after paying expenses of making these products. Operating income 46, so about 50% of, a little bit over 50% of what gross profit is going into their operating expenses. And net income, definitely went up here, about $101 million in net income. I want to look at the metrics of analyst coverage here. So this is what I was talking about from the two lines of growth for this company, right? They have their online sales, and as you can see, their online sales from 2023 quarter over quarter let's look at trailing month, quarter. Yeah, let's look at this. As you can see, um, March, December, March, June. As you can see, this company is continuing to grow their online sales, and this is like I was saying, where their bread and butter is, and this is where you can see the revenue is the highest compared to their wholesale, right? This wholesale is obviously selling to large companies like Walmart, Target, and also, as you can see, this is growing. They're making about, they used to make about what, 24 and 22. We're seeing about $24 million. That's been kind of, sitting there constant, and as the company gets bigger, I'm only seeing this getting bigger. Where is it going? It's going into hospitals. It's going into online Amazon stores, online different like not Wells Fargo, Walgreens, all those kind of your corner stores where people can just go and see a HIMS product and be able to buy them. As you can see here, over 90%, it was 50% growth in their online sale. Their wholesale growth is sitting at about 40%, which is phenomenal to see. Operating metrics, so net orders here, as you can see, these are pretty cool numbers here. Their net orders are growing. There's about 7.69 million net orders, and as you can see, this is just growing about 30 to 20%, right, quarter over quarter, and continues to grow well into 2024. Subscriber growth as an online store, that the most important thing is you want to be able to constantly grow the number of subscribers, the number of people that are using your products, and this is a phenomenal number to see. So your subscribers, right, starting in 2022, quarter over quarter, here they were 1.12, 21, 1.3, 1.4, and they just continue to grow, and now they're about September 30th, the last earning report. Since then, they're sitting about 2.05 million customers, subscribers, and these subscribers are, I'm sure, some of them are using very custom drugs, right? Meaning like they have went in there and they said, I want this amount, I want jelly, I want pill, and very custom types of drugs. Others are probably getting HIMS generic whatever drugs there are on there, and just getting whatever's available, and obviously from a customer perspective, you want somebody that's dedicated, meaning they go on HIMS and they get the type of drugs that is very customizable. They go in there, they customize it. That means they're not going to go anywhere else and be able to find that specific drug that is that custom for themselves. So they will continue to be recurring customers, meaning a recurring revenue for HIMS&HERS, and just amazing for the company overall, and obviously right now they're selling smaller drugs. As HIMS&HERS sells more and more higher ticket items, these revenue per customer continues to grow, meaning their recurring revenue quarter over quarter, they can kind of rely on these numbers and actually start getting financing and everything else based on these dollar values that they're gonna get due to these recurring values, recurring monthly subscribers. Monthly online revenue per average subscriber, this is what I was talking about. So it used to be 50, 53, 54, now they're sitting at 70, right? As for every single customer they have, they're sitting at about $70, $67, and this will continue to grow, as I was saying, when they start selling higher ticket items, because they're going to be, for every single customer is going to be able to is going to be paying more. That means HIMS is going to be able to make a lot more, and this is something I was talking about in their on their income statement, is that they're paying a lot of money in their operating expense, specifically for this marketing. And the marketing expense, as you can see, it hit almost and September 30th, it hit almost $600 million. And this is a problem. It's a great investment, but you want to, over time, you want to kind of slow that number down and see if you can naturally grow your customers and not always just investing so much money into marketing. Metrics forecast. So let's kind of look at investor forecast. Right now is sitting at buy, right? These are the recommended trends. So you have just in November, let's go back to October, right? In October you have strong buys, 6 analysts saying strong buys. In 6 strong buys, overall total of 12. You have here saying in November you have 1 sell, 6 hold, and 6 strong buy. So another analyst came in and said, hey, you know what, there is mostly what we have, 1 person saying sell, so price, the rest are saying not buy it or hold it. Going into the next month after, we're having strong buy continues to stay strong, and the number of people saying, you know, you should sell now stayed kind of consistent, or analysts saying they should sell, it continues to kind of stay consistent here. As the company, you know, continues to grow and grow and grow, it's going to be in front of a lot more analysts, and analysts are going to start looking at the company, and they're going to be able to make a good, I don't know if it's good or more judgment on where the company is expected to go in the future. They have this analysis here. Analysts saying that the price can be anywhere within this range. Within this right now is $32. They're saying by December, by the end of the year, I mean, they're saying as low as $11, as high as $38. And so these analysts are just all over the place. From the highest analyst forecast, we're seeing right now still at $32. I got about what, $5 and 79 cents still to get to this $38 high. So these are some of the big latest forecasts they have. I mean, we kind of saw these, but this, like, it looks like this person from this firm is saying a strong buy. The price is still going to $38. That's about an 18% increase from now, from, you know, yesterday's price. This individual from TD is saying, you know what, it's $28 stock, and just this strong buy is a $28 stock, and they are definitely wrong. The price currently is above what they're saying. This individual from B of A Securities is saying that, you know what, it's going to 18. They were wrong. The stock is at 32. They are definitely 44% wrong in November 14, 2024. So obviously the analysts are just all over the place on this stock, and they don't even know how to completely review it and give it a good pricing here. Here are some revenue forecasts. They're saying that HIMS should be able to hit about $1.5 billion, which is 71% year-over-year revenue growth. They're thinking revenue next year. They're thinking about, you know, almost a 1.5, well, 50 million. Is about what 152. So they're saying about 500 million dollars they're going to be able to hit into going into the next year. EPS is going to be growing at 0.56 this year, and they're expecting about 0.51 next year, which will be down from where it is. Revenue forecast here, they're just all over the place going into 2026. They don't really know how to forecast it this year. You know, it's closer, so the numbers are a lot tighter here, thinking about this $1.5 billion revenue. The revenue growth, they're expecting this highs of by the end of the year, 77.1 at the highest and 64.3 at the lowest for the revenue growth this year by the end of 2024. Yes. As you can see, they kind of taper this number off. They don't believe HIMS&HERS can hold up this revenue growth value over the course of time. EPS forecast, EPS growth. So there it is. I think I kind of just kind of went over, overall price of the company, and we looked at, what HIMS is, the some of the cool parts of the services that they want to provide. I went over the finances. I was gonna go over the videos, but I think we've done enough damage, and video reactions will be probably follow up in another video. If you enjoyed this analysis of my perspective of the company, so from my perspective, where is HIMS is gonna go is, I think it's a strong growth in the long term. The reason I say that is, well, this is a company that is coming into an industry where you have the government and is kind of very much against the big pharmas, and they're kind of they're going to be blocking a lot of the stuff, and they're going to be standing in their way, and so smaller companies like HIMS is going to be able to catch up, right? JFK's who's going to be the new Make America Healthy Again. He doesn't really like the big the medical and industrial complex that currently exists, and so companies like HIMS, it gives them room to kind of take some of that market from these large institutions. So, and meaning over the long term, over 2025, 26, 27, 28, I can see a company like this continue to grow. And that's it. I hope you enjoyed this video. If you did enjoy this analysis and just overall review of the company's finances, who they are, what they want to provide, and what they want to continue to provide, go ahead and subscribe. I'm going to be posting, as much video as I can whenever possible. If you want me to analyze another stock, just drop it in the comment section. Thanks so much for joining me. Have a great day.